Hello students and welcome to the lecture. So students, as we know that we are covering the financial knowledge and basically the banking awareness part of it. Okay. And since last few lecture, we had started our discussion over the Exim Bank, right? Export and import bank. We have seen various facts and figures regarding it, like the overview part, like the objectives, like the regulation. Okay. And then in the previous lecture, we had started with the functions. We had covered only the one aspect, and then we are left with these parts: promotion programs, international presence, infrastructure finance, summary, and functions as well. Okay, so I hope that you have revised the previous lecture well enough that you have come for this lecture, because if you are not revising the previous one, you will not be able to grasp the facts and figures in a proper manner. Okay, so with this note, let's start this lecture. Okay, so basically we had started the functions, and in functions, basically export finance, we had covered the pre-shipment credit. Okay, I had told you that whenever there is an order received by a buyer, okay, received by a supplier from a buyer. All right, like we had taken example, this is the Indian person, this is the Russian person. Okay, this person is the manufacturer. Okay, and this person is the buyer. All right, so we had discussed a situation in which the buyer gives the order to the manufacturer and the manufacturer is required to supply the goods to the buyer. All right, and before you can say supplying of the goods and before the shipment, the credit which is to be provided by the Exim Bank to the manufacturer is known as the pre-shipment credit. Okay, and why it was provided, I have told you already. So now if we move forward, we have the post-shipment credit. Okay, so about the post-shipment credit, we had already discussed it in the previous lecture, but here we will try to recall it. Okay, so this involves extended credit to the exporters after the shipment of goods to support their cash flow needs until they receive payment from the foreign buyers. Okay, like please remember, I have told you, if we go by the case in which we have the A and we have the B. Okay, so when the A will send the goods to B. Okay, let me make it again. All right, to B. Okay, then A is supposed to be paid by B for the goods he has supplied. Okay, so this is called the realization of export. It means that the goods for which the order had been received have been supplied or have been shipped off. All right, but the payment will take few time to be received. All right, because he will pay in his rubles if we take him as a Russian person, and then this person, Mr. A, required the money in the Indian rupee forms. Okay, so this settlement takes some time. It is not like you can say done in the blink of eye. It will take a time. All right, so this is the post shipment credit. It means that till the manufacturer receive the money from the buyer, the Exim Banks provides the credit to the exporters. All right, so that they could carry on their business. Thereafter, import finance. Import finance refers to the financial support provided to the Indian importers to assist in their import transactions. Exim Bank offer financial assistance to importers, which can include like buyer's credit. Okay, but before this, let me tell you one thing. In the previous lecture, I had already told you, but here I am just making it revising for you again. All right, imports are necessary because remember, I have told you, because it is not possible that the person or the country possess everything they required for their production. This is not happen. All right, so what basically happens here, we have to acquire the technology, we have to acquire something from the outsiders, so that we can make ourselves capable enough to do the production which could lead us to the international market, and we will survive the competition. Okay, so same thing happens here. All right, import finance is an another service by the Exim Bank, in which Exim Bank basically finances the importers. All right, they facilitate their transaction. Okay, because you can say, suppose this is A, this is B. Now just change it. This is the Russian person, this is the Indian person. Okay, A was the exporter, B was the importer. So in such a case, suppose if B was taking something from A, okay, then A will expect the payment. Okay, it means that B will pay to him, A will supply the goods to him. All right, and this will also done in the same manner, like the B will provide the Indian rupee. Okay, and this person expecting the payment in the rubles. Got it? So this kind of transactions are facilitated by the Exim Bank, which could includes, like, the first is the buyer's credit. This is credit provided to the foreign buyers of Indian goods and services, enhancing India's exports by making it easier for foreign buyers to purchase from Indian suppliers. Okay, basically it is an import finance. All right, so how we could connect it, like we can say it is a credit provided to the foreign buyers of Indian goods and services, enhancing India's export by making it easier for foreign buyers to purchase an Indian suppliers. What does it mean? What does it mean basically? So basically what's happened here, you can say, suppose this is the country A, this is the country B. All right, A is the foreign player, B is the Indian player. Okay, so now suppose this is the Exim Bank. Exim Bank assists the foreign player so that the foreign player will invest in the country India. Okay, and when they will invest, the Indian manufacturers will become unable to make the finished goods and sell it back to the A. Right? This is called the strategic partnerships in the trades. Got it? Here we are doing imports as well as we are making exports. Okay, but for this we required a smooth chain of finances. This will be ensured by the Exim Bank. Got it? Okay, so this is called the buyer's credit. Supplier's credit involves credit facilities for Indian importers to defer payments for imported goods and services, supporting their working capital need. Now here is defer payments. What do you mean by it? Defer payments. Okay, like you can say, suppose this is a person. Okay, this is an Indian manufacturer. Got it? This Indian manufacturer requires to import a technology, from some foreign player, or you can say foreign supplier, technology, goods and services, whatever you can say. All right, so let's assume this person is selling the goods and services at $80, for example. Okay, so if we convert it into the Indian format, then it will be like this one. All right, or you can say this will be a Indian rupees or INR. Okay, Indian national rupee. So this person is required to pay 6,400 to that person so that he could import the technology. But let's assume, because it's an example. All right, this person is not capable enough to pay the 6,400 to that person, import that particular technology, and even carry out his day-to-day operation as per the working capital. Is it possible for him? No. All right. So in such a case, we have the example of defer payments. Defer payments. Now, what's a defer payment? Defer payment is a term which we particularly use to denote the payments which are required to be made in the future. This is called the defer payments. Okay, what does it mean? It means, suppose this is that person, Indian person, this is the foreign player. All right. So suppose if the transaction was initiated on the 1st January. All right. So how much amount is to be paid? Rupees 6,400. Okay. So in such a scenario, defer payment will enable him to import the technology in 1st January, but pay it the future, pay it the amount in the future. You can say suppose in the March or 31st of March after 3 months. Okay. So do you think that during this time period, that person who was the exporter will be settled off? No, he will ask the amount immediately so that he could supply the goods and services tension free. That his amount has been received. He is not required to get the amount from him in the future. So he could easily supply the technology to him. All right. But what we have seen, what we have said here, that the transaction was initiated on the 1st January, but payment is to be made 31st March. Then how the system is working? So here comes the Exim Bank in the picture. Okay. On behalf of him, the Exim Bank will pay 6,400 to him. That person will supply the goods and services to that person, and after the maturity, it means till the 31st March or after of it, that person will pay the amount to the Exim Bank. Okay, so this is called the defer payment. It means you could buy the goods and services now, but you are required to pay in the future. Until then, the Exim Bank will pay to the supplier on behalf of you, and then you are required to pay to the Exim Bank. Okay, so this is what we called as a supplier's credit. Got it? Or defer payments, exactly. So that you could utilize your money right now for your working capital needs. Your business should not be hindered off. Okay. Thereafter, lines of credit. Exim Bank extends lines of credit to foreign governments, financial institutions, and foreign buyers. Okay. Basically, it is a very you can say interesting phenomena. I will tell you about it. But first, let's see what is written down here. The credit lines are designed to promote India's export and project exports by facilitating overseas projects and trades. Lines of credit can be used by foreign entities to purchase Indian goods, services, or undertake infrastructure projects. Now, I hope that you have got an idea, but let me give you a proper explanation. Suppose this is the country, foreign country A. This is our India. Okay. So this particular country requires imports. You can say imports, not exports. Okay. This country requires imports. Okay. We requires exports. We have exports. They having imports. All right. But what is happening that our country is ready to supply the export on rupees 300 millions, but this country only having rupees 150 millions. Okay, it means they do not have a sufficient money so that they could buy our exports. In such a scenario, what will happen? The Exim Bank again come in a picture. okay, send extra rupees 150 millions to him. Okay, so total amount will become 300 millions. Okay, but there will be a condition that this 300 millions should be used to give orders to the Indian stakeholders so that the Indian stakeholders could supply the goods and services worth rupees 300 millions to that particular country. So that's how the lines of credit work. It means that we give them the credit so that they could invest it in our country. We could process their orders, like we could export the goods and services to them, and this will lead us to the entry of international market, because it will bring us the buyers, and when the buyers will come, we will start our business. Okay, thereafter, in the functions and services, there is a overseas investment finance. What do you mean by it? Let's see. Exim Bank supports Indian companies in their overseas investment ventures. This involves offering financial assistance and advisory services to Indian businesses seeking to make investment abroad. Okay, it means that we just not only facilitate those manufacturers who reside in India, but our aim is not, or you can say our aim is not only to promote the export and import, and not only promote those manufacturers who reside in India, but our aim is to maintain the, or to increase the Indian manufacturers' global reach. Okay, so the best of it, because some countries say that okay, we will take your goods and services into our market, but we have a situation that you have to start production in our country. Okay, so in such a scenario, you can say, if this is a foreign state and this is India, all right, so we are ready to export, they are ready to import, but they are saying that your manufacturers must require to establish their factory outlets in our country, produce here, then sell it to the market. Okay, so this is basically requires the overseas overseas investment. Okay, so the Exim Bank supports Indian companies in their overseas investment ventures, involves offering financial assistance and advisory services to the Indian businesses which are seeking to make investments abroad. Okay, to provide them the credit so that they could use it, establish their factory outlets in the foreign state as per requirements, and start their business. This can include funding for projects, joint ventures, and subsidiaries established by the Indian companies overseas. Like, here are so many conditions, just not only one conditions. Like, first is establish total new outlet. It's first condition. Second is joint ventures. Third is subsidiaries. Okay, so there are three conditions totally. If we go by them one by one, first is a new outlet. It means that, suppose if this is a foreign state, this is our country India. Okay, in such a scenario, when the India wants to export this particular country, the country is saying that you have to establish a total new factory outlet in our country. Suppose if there is a company XYZ in India, so A can say that XYZ must require to open its factory outlet in country A, provide employment to our people, then we will provide the access of our market to the XYZ. Definitely this will you can say contribute in our exports, bring us the forex currency, but we are required to open the factory outlet here. So this is the first condition, that we have to establish a proper new factory outlet. Second is the joint venture. Joint venture means, suppose this is a you can say company XYZ. They having the company DEF. Okay, so they are saying, all right, we are ready to do a trade with you, but we have a condition that you have to make a partnership with our company DEF, then only you can do the export business in our country. Okay, so this is a condition of joint ventures. All right, thereafter the third condition is a subsidiary, which is very, very similar to the joint venture but somewhat different. When you do the joint venture, basically you are making the partnership. All right, but when you are doing the subsidiaries, basically you are taking the ownership. Okay, so in the first case of joint venture, the DEF and the XYZ will get together and work together, but in the second case, subsidiary, the XYZ will take over the DEF. All right, and then we'll start a business in the name of XYZ or whatever the name will be, but the initial investment for the you can say acquisition is required. Okay, so these are the three types of overseas investment generally made by the Indian producers when they want to do the business with those states or those countries, which says that we could only give you the access to our market once you open your outlet here, so that you will get your market, you will get your business, and we will get the employment facilities for our citizen. Okay, now if we move forward, trade finance. Exim Bank offers a comprehensive range of trade finance products to facilitate smooth international trade transactions. All right, which could include export bills rediscounting. Exim Bank provides a facility to discount or rediscount exports bills or invoices, allowing exporters to receive immediate payment. All right, because as I have told you, the realization of exports are very, very important. Why? Because when the manufacturer you can say produces something or manufactures something, all right, he is invested the capital in it. Okay, he has invested the capital, labor, efforts, time. All right, then he has produced something, and when the thing will reach the buyer, the next very step is to ensure the fast payment to the exporter. Why? So that not only he will recover his cost of production, but also recover his profit, so that he could do the business easily. Got my idea? So that's why the Exim Banks plays a crucial role in the realization of exports, or you can say in the export bills rediscounting. Why? Because generally when we do the international trade, we are doing the trade mostly times in a common currency which we call the US dollars or USD in short, because it is an international currency, right? But basically what generally happen, USD is not you can say applicable in the Indian domain. Why? Because it is a foreign currency. So if you are getting the USD, you have to convert it into the Indian rupees, then only you can use your money. All right, so Exim Banks tries to ensure that the discounting or the rediscounting of the export bills or invoices must be done in an immediate manner, so that the exporters will receive the immediate payment and their continuous and the smooth working could be ensured. All right, letters of credit. This is a financial instrument issued by Exim Bank to guarantee payment to the exporter upon fulfilling the terms and conditions of the trade agreement. All right, letters of credit, basically you can say letters of credit. It is a financial instrument which Exim Bank issued, all right, as a guarantee payment to the exporter upon fulfilling the terms and conditions of the trade agreement. Basically in the previous lecture we had discussed about the trade agreement. What do you mean by the trade agreement? So trade agreement is basically the legal document in which all the terms and you can say terms and conditions of buying and selling of goods and services are mentioned. Okay, for example, you can say, suppose this is the Indian person, this is the Russian person. All right, the Russian person gave order of 100 units of the pharmaceutical product. All right, then this person, Mr. A, is eligible to receive rupees 100 at per unit from B. So these are the terms and conditions, like 100 units is to be supplied and the 10,000 will be the amount receivable by the A. All right. So basically what's happened, the Exim Banks plays a role of mediator and issues a letter of credit. Letter of credit is nothing but a financial instrument, okay, which act as a guarantee payment. All right, like you can say, when the Exim Bank gives the letter of credit, it is a guarantee to the exporter or the manufacturer of that particular goods and services that you could produce the goods and services as usual, but you will receive a fixed amount, and you can say you can receive your amount on the fixed day. Okay, terms and conditions of the trade agreement must be fulfilled and must be mentioned. All right, so this is what we call as a letters of credit. Got it? Now, bank guarantees. Exim Bank can issue bank guarantees to support trade transactions, ensuring the fulfillment of contractual obligations. Like the same thing is to be expected by the other player. Like you can say, suppose if this is our player, all right, this is foreign player. So foreign player, after providing the order, he must have to submit some advance to A so that the A will start the production. All right, so he also required the guarantee that if I'm paying some amount to A as an advance, I must be receiving the goods as promised in the agreement. So for this, the bank guarantees. Okay, so this is the bank guarantees which is to be issued by the Exim Bank that your following transaction could be done as per the promise mentioned in the trade agreements. Export marketing. Exim Bank provides exporters with valuable information, market research, and export-related advisory services. Okay, this assistance helps Indian exporter identify potential markets, understand market dynamics, navigate the complexities of the international trade. Okay, Exim Banks plays a role in promoting Indian goods and services globally, as I have told you and we have discussed in this lecture only. Okay, so students, basically in this lecture we have done with the functions of the Exim Bank. Now in the next lecture we will continue with the Exim Bank and we will try to finish it off. Okay, we are some things which are to be discussed, we having something which are to be discussed. All right, till then please make sure that you revise all the facts and figures in a proper and the efficient manner before you have come for the another lecture. With this note, let's end this lecture, and what we say thank you.